The following program is paid for by the Real Estate Radio Network.
You're listening to Real Estate Radio Fresno on 105.9 The FM KMJ. Now, live in studio, your host, local real estate expert, Craig Barton.
Good morning, Central Valley. I am your host, Craig Barton, and welcome to the Real Estate Radio Network, the most important hour of radio each week here on 105.9 The FM KMJ. Real Estate Radio is a show dedicated to bringing some rational thought to that crazy world that we live in and helping you to rebuild the Central Valley's housing and credit markets. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted advice. And that's exactly what you are going to hear every Sunday morning right here at 7 a.m. here on 105.9, the FM KMJ.
You want some more coffee?
Yeah. I would have to say this is probably an appropriate time to ask the coffee lady to bring the cart by.
I'm bringing it.
And percolate me up, please. Thank you so much for joining. I do need some coffee this morning.
I think you do. That's okay. I always have lots. I've got some to share.
I was going to say, prior to the show starting, it was pretty evident that you were pretty percolated this morning.
That is why I show up.
That is why?
Yeah,
just for the coffee?
I want to keep you perky.
Oh.
No.
Oh, okay. Wow, it's not just the coffee, it's me. That's so sweet.
Gotta liven you up, friend.
There you go. Well, as always, it is so good to have our special guest host, Michelle Pettiscavalli, in the studio with us today. Michelle, just so happens, on your way here, you're a licensed realtor.
Really?
Yeah.
Right on. How'd I get that?
I pulled the records.
No,
I can show you on the real estate website that you are a licensed realtor and also a trusted local professional. I have got testimonials.
Thanks,
from
Greg.
people that you've done business with.
I have, and I appreciate that. And we love those referrals.
I've got them framed in a binder.
You make it sound like there was one you hung on the wall.
No, I said them framed.
Oh, them. Okay. I'm like, okay, the binder.
In a binder. Multiple. You know, it's like a little portfolio that I've got going
sweet.
for you.
Thanks, Craig.
As always, thank you so much for getting up so early this Sunday morning.
Anytime.
Yeah. Well, you know, the beauty of Real Estate Radio, Michelle, is that it gives us the opportunity to reach so many people efficiently for one full hour each and every week. It's hard to do when you parade them one by one across your, in your office and sit down with one client at a time. It's much easier.
There's only so many hours in a day.
And
there's only 7 days
You're
this
preaching
week.
to the
I don't know what you did last week, but I'm telling you right now, you got to stop at 7.
I keep telling everybody I need like 4 of me, and that's not even. That's why it's so important that we get together every Sunday morning and share the message, or hopefully share our message with our listeners. Our goal is to get you, our listeners, the timely and accurate truth about your real estate market so we can help bring you
back home.
Gotta love it.
It's on your Facebook now. Watch out.
Like I said last week, guilt's an amazing tool when used divisively. Well, on today's show, we're going to talk about buying properties in today's real estate market that need a little love.
Or a lot of love.
Yeah, or a lot of love. By saying that you need a little love, we mean they need repairs and don't qualify necessarily for most types of financing. If you want to buy any of these types of properties and necessarily don't have the cash, meaning you don't have cash, $60,000, $70,000, $80,000 to plop down on a property, how do you compete? Well, we have got the answer for you as well as some great advice for real estate professionals. I say that tongue-in-cheek because
some of them don't want to hear it.
Don't want to hear it, and we're going to tell you anyway.
We're going to ease them into it.
Exactly. We're going to be gentle. We're going to start off with a hug, right? Well, what we're talking about is it's called 203K financing or rehab financing. We're going to take a closer look at the process of purchasing any property with 203K financing and try to get you armed with some do's and don'ts and to help set some right expectations as you hunt for the perfect diamond in the rough. Well, make sure you stay with us. If you have any real estate or real estate financing questions or questions regarding the information that you hear on our show, call us anytime on our off-air number at 800-979-3958. You can also check out our resources online at reofresnohomes.com, or you can use press 4 keyword
KMJ, call Valleywide
to get connected to us anytime. We'd love to hear from you. Well, you heard me use press 4 keyword, KMJ, call Valleywide. Well, we want to help show you that you'll only need one button for the rest of your life. And just so you know, I have to go on the record that I did speak with the CEO from Press 4,
Really?
and he said, we're going to let you do it one more week. If you guys do what you did last week,
Yeah, they're going to kick us out.
Press 4 on your mobile home. I mean,
They said no more of that.
It went wrong
I know.
so many different ways. Well, what is Press 4? Press 4 is for all those times that you're away from your computer and listening to our show. Now you can get what you want with just one simple push of a button on your mobile phone.
Mobile phone. You did it right on, Krager.
Well,
Nice.
I understand that my job's on the line.
Well, you need to, right. We've been told we need to enunciate.
Yes, enunciate. Well, it helps with using the right words just out of the gate, but enunciate is part of what we do. Yes, thank you. Well, how do you get Press 4? Just go to the Press 4 website at press4.com. That's PRESS, the number 4.com. And follow the easy setup instructions. Press 4 will work on any phone. During our show, you're going to hear us say things like, to call into the show, just use Press 4 keyword KMJ.
Call Craig.
Call Craig, or call Valleywide. And in this example, your phone will call directly into our show or call us anytime. It just doesn't have to be during the show. I get tons of phone calls. Well, the last 2 weeks, we've gotten tons of calls and great response from the shows and the new time slot on Sunday mornings. But when the show ends, the calls tend to stop. Yeah.
No. We want them to press 4 anytime.
Yeah, exactly.
I mean, let's be honest. If you're an agent out there showing a property and you have a question, even those, I mean, that's what we're here for.
Exactly.
On a 203K call list. Let's talk about it.
Be
let's
a resource.
Talk about,
that's what we want to be,
absolutely.
as a resource. Trusted resource, hopefully. In time, you'll learn to
Right.
trust us.
Exactly.
And
We're building some trust, I think, with our 11 million listeners.
And one. Yeah, exactly. Well, in today's Find Your New Home segment, again, Michelle, I'm going to tell you, we need to help simplify the home finding process, or the home looking process. Might sound kind of odd, but in today's world, with all the online resources that buyers have, unfortunately, it can be a lot overwhelming. So when it comes time to sit down and actually... We don't want you to load your wife up in the car and say, all right, honey, we're going to go find us a new home today, and you're going to drive and gas is $4. And next thing you know, everybody's really a little disenchanted, a lot grumpy. And typically low blood sugar as well. Well,
It is tough out there right now.
there's a lot of resources online. We want to make sure that we get you timely and accurate information, and we say that because finding your new home is the most important thing that we can do to help you. Well, you can go to, did you know that there is an easier way? You can actually go to our website. We'd love to help. If you'd like to drive the bus, all you need to do is go to REOFresnoHomes.com. Go to the right-hand side of the page, about a third of the way down. Sign up under the Find Your New Home tab. Tell it you'd like to drive the bus. You tell it exactly what you want it to do. And it'll immediately start pulling information from MLS and sending it to you. The moment that a property comes on the market, it will send you the information with regards to that particular property. Now, flip side of the coin, if you'd like us to drill it down a little bit more, and you'd really like our assistance, if you'd like us to help drive the bus, all you need to do is call us anytime on our off-air number at 800-979-3958, or use Press 4 keyword KMJ.
Call Valleywide.
And Michelle can help simplify the search for your new home. How eager are you to help clients?
I'm so excited to set these searches up, I'm telling you, because it just educates them immediately. Oh my gosh, Michelle, the houses are going so fast, or they're pending. Oh my gosh, already? We just saw it yesterday. Yes, it's fast. Right now in this market, things are moving. If they're priced well and in good condition, they're moving fairly quickly. I will tell you, on this particular search note, I put an offer in on a short sale a couple weeks ago. You heard that right? A couple weeks ago? My client calls me this weekend. Michelle, the property shows back up on MLS now. Does that mean we got it? No, it means it took that long for that agent to update the system. That's your offer that is now making it back up.
Oh, really? It
Yeah.
was.
So having a good agent on board who's going to touch base with other agents and keep in the loop on what is going on with these properties before you just go look at them is really important too. I know that when we're training new agents in the office, you can't just assume. You've got to talk to somebody. We are all talking to people all the time to make sure we know what's brand new, what's in negotiations, what's going on. And so having an agent on your team is very, very important.
Well, and one other thing, a quick side note, but related to finding your new home, it's amazing to me not only how many clients have not. A client would say, when I'm speaking with someone, I want to first and foremost, are you working with someone? Are you working with a realtor? Have you established a relationship? I don't want to step on anyone's toes.
Sure.
If they are, that is their client.
Right.
Well, they say, well, someone did set something up for me a while, or yes, I was working with someone. Well, did they go through the process of setting up a portal for you, a search? No.
I'm surprised how many people aren't utilizing it.
Yeah, for agents, my gosh, that's like, that's having another, what do they say, another arrow in your quiver. But one of the most
effective tools.
Exactly. You don't leave home without it if you are an agent. Secondarily, more importantly, as a consumer looking for a home, you don't even need to leave home until your portal is set up, until it's dialed in, until your agent has taken the time to go through the process of making sure that your wants and your needs are addressed and input into that portal, so we get you, or so they get you, the right property at the right price that you're looking, or within the right price range that you're looking for, in the right area with the right amenities, and so on and so forth. So,
which leads us to our next subject.
Our hot property feature. I gotta say, I
was excited to see this one, weren't you?
Yeah, I'm not patting myself on the back because it's not my. I can't take the credit.
Feather in your cap?
This is 6 weeks in a row that, granted, last week we had two properties, and so it was our hot properties, plural segment.
Right.
One of the properties went pending.
Nice.
Over the weekend.
And that seems to be consistent. They're moving quickly. I love it.
And that's why I say I can't take credit for it, because the market's moving so fast. Again, this week we're right at
No, take credit. Take credit. It's okay. We won't tell anybody that you're taking credit for that.
You big liar, Craig. All the other agents that are out there that are working in the industry are saying, oh, come
Whatever,
on,
Craig. I'm the one who bought the house.
Please.
Right.
Yeah, you could, so this last weekend, the property on Goshen went into contract. Nice, solid offer.
Great.
Sellers are extremely excited to have the property in escrow. Well, let's take a look at today's hot property. Come view this beautiful. I feel like I should have an echo. Johnny, can you do an echo in the background? 4,075, because this is.
This is no farmhouse.
Yeah, this is no farmhouse. 4,075 square foot of luxury living in the St. Andrews Estates. It's a 5-bedroom, 3.5 bath, Gary McDonald home. Gary McDonald, great local builder, does phenomenal custom home work. This particular home has cherry cabinets, granite countertops, black appliances, tile floors, high ceilings, and lots of windows with plantation shutters, and 2 beautiful, gorgeous front doors. People might be thinking, well, why are you talking about the doors? Because they really are gorgeous.
Well, and if anybody's ever built a home, doors are expensive.
Yeah. Especially
and it's
nice
quality.
ones.
I mean, Gary puts quality in these houses.
He
They're
sure
really
does.
nice houses, yeah.
2 bedrooms and 1.5 baths are downstairs with a huge master suite and 2 additional bedrooms, 2 baths, and a gigantic game room, or a room that you could turn into a movie room, or a 6-bedroom upstairs. Separate formal living room and dining rooms, kitchen countertops, family room with marble fireplace, cherry wet bar. Now, here's what I really like.
Cherry wet bar, does that mean I get banana splits? Or when you say
cherries on the wet bar?
Yeah.
No. It's,
all right.
Yeah, cherry wood wet bar.
Oh, okay.
Sorry, Pebble Tech Pool. That's what I was going to say. That's the part that I really like. Pebble Tech Pool and a spa, stamped concrete, covered patio and decking, large grass area, laundry room with sink, counter, and storage, 3-car garage, and much, much more. All this behind the gate at St. Andrews Estates.
Nice.
And close unified schools.
Which is very appealing to a lot of people.
Most definitely. All this for only $5,069. If you'd like more information about today's hot property, please give us a call anytime on our off-air number at 800-979-3958, or use press 4 keyword KMJ.
Hot property.
Yeah, and we'll send you more information about this hot property right to your phone. Look for more hot properties each week right here on the Real Estate Radio Network. Well, after the break, we are going to take a look at the upside down. And I don't mean upside down. I mean underwater homeowner.
Because I'm like, really? Upside down?
Not like we had somebody.
The upside of being down?
Yeah. If you're upside down, you're probably down.
Yeah, you're down.
Well, there might be more solutions out there for you than you actually think. You are not going to want to miss this. You are listening to the Real Estate Radio Network here on 105.9, the FM KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Thinking about buying a home? Find out how the HUD Home Store can help you. Visit HUDHomestore.com. Look at HUD homes available for sale near you or nationwide. Why HUD Home Store? HUD will pay up to 3% of the buyer's closing cost. The price of the home is based on an FHA as-is appraisal, which is already completed, saving you an average of $400. And there is an owner-occupant priority bidding period during the first 30 days. Want to know more? Visit HUDHomestore.com.
All it takes is one call to the professionals at Valleywide Homes, and you'll start building wealth in real estate. Whether you're looking for your first home, moving up, or your next income-producing investment property, let the experts at Valleywide Homes help. There's never been a better time to get into the real estate market. Visit our website at reofresnohomes.com or call toll-free 800-979-3958. That's 800-979-3958. And put the seasoned professionals of Valleywide Homes to work for you.
You're listening to Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
Well, are you upside down on your mortgage? It's a good thing that I actually finished that sentence.
Yeah, because I'm thinking, really, I haven't been on a trampoline or any kind of circus equipment lately. How do you get upside down?
Well, if you're upside down on your mortgage, there might be more solutions out there than really what you think. And we continue to talk, and I think it's extremely, extremely important. We continue to talk about underwater mortgages. And it's a very relevant and I think extremely important topic that we continue to address. Well, if you bought your home somewhere between the years of 2003 to 2009, or if you refinanced during those years, you might find yourself, like many homeowners, unfortunately underwater. And underwater simply means that you owe more than what your home is worth, whether you have a first mortgage or whether you have a first mortgage and, let's say, a second mortgage. You're still underwater. Bottom line is you owe more than what it's worth. Well, there are options out there if you are underwater, but there's special qualifications that you've got to keep in mind. The Home Affordable Refinance Program, which is the acronym HARP 2.0. I had an agent call me this morning and say, Craig, tell me about this HARP 2.0. It's still, the word is still slowly but surely trickling down to the streets. So we know for a fact there's folks out there, even agents that are in our industry, that don't know really much of anything. And she says, well, tell me about it. Tell me exactly what this HARP 2.0 is. And simply put, it is this. If your loan is owned by Fannie Mae or Freddie Mac, and I stress this, it has to be owned by Fannie Mae or Freddie Mac. If it is not owned by Fannie Mae or Freddie Mac, then HARP 2.0 is not for you. You're not eligible for any type of refinance under HARP 2.0.
Which does not mean there are not other sources.
Correct.
So don't stop there.
Exactly. Don't stop there.
Continue with the research.
We're going to continue to talk about what are the options. That's why I think it's so important. You had asked me, I don't know, last week or the week before, and said, so why are we talking about this, or why are we talking about underwater? Kind of packaging this as a segment. Right.
Over and over.
Yeah, over and over. And honestly,
it's evolving.
Well, here's a perfect point. I had a call in last week to the show, And it was a young lady that was currently going through the process of a short sale. And we mentioned later in this particular segment about relocation assistance. I had a client, and let me kind of piggyback on that. I had a client, it was a funny story, client telling me, well, why does this happen this particular way? It's never happened to me this way. That is his perspective of his little world. And I said, well, did you ever think in a million years that you'd hear relocation assistance for someone going through a short sale that is somewhere between $3,000 and $25,000? Well, that gets a lot of people's attention.
Yeah.
And he said, no, I didn't. And I said, your situation is specific to your situation.
Right.
I said, I never, I try to be very analytical like him. And I said, buddy, your situation is your situation. Never say never. And that's one of the things I've learned in this market. What we see today is not the same that we saw 5 or 6 years ago.
Right.
What we see today is not what we're going to see a year from now.
And 6 months ago even, it's changed.
Oh, my gosh.
Well, and HARP 2.0 is a good way for us to can that subject. So that's the reason you use it. But it doesn't mean that if your mortgage is held by some other entity that these types of options aren't available through that entity. So that's the one thing that we want to make sure people understand.
So let's kind of recap again. It's got to be a Fannie or Freddie owned loan. We can check the eligibility for you. There's a simple way of going about it's not a blood test or
shoe size,
no. Like I said, height, weight limit requirement.
Yeah.
You don't have to meet any of that stuff. It just has to be owned by Fannie or Freddie. We can do that for you. What they've done is they've removed the limit as far as loan to value is concerned. So there is no requirement that if your home is worth $100 and you owe $175, it's not a problem.
Right.
Not a problem whatsoever. So it just has created some hope for homeowners that are looking for some sort of temporary reprieve in terms of, hey, I'm paying $6.5, I owe $175, my home is worth $100,
and rates are 4.5 now.
Exactly.
Can we adjust?
Yeah, exactly. How much relief am I going to see that's going to help me or affect me right now? Because I can still make my payments. If I can still make my payments, continue to make your payments. But HARP 2.0 might be something for you. In terms of just temporary relief. Now let's talk about if it's the case that your home loan is not owned by Fannie or Freddie. Well, so let's start from the very beginning. Number one, how far upside down are you? Are you delinquent? Backing up to if you're delinquent, you can't make your payments, then you really need to take a long, hard look at, is a short sale potentially right for you under your circumstances? If you've just got to the point where, for whatever reason, you lost a job or a spouse lost a job or you lost bonus overtime or some sort of income, or you've experienced a death of a spouse, God forbid, if there's a hardship that you've experienced and you can no longer make your payment, you really need to look at some of the other options, which short sale would be one of them. And a short sale is not a situation that so many agents or agents as well as sellers might think that short sales are a bad thing or short sales take too long. Or I even had a personal friend that I was talking to today and said, hey, educate me about short sales. What does the process look like? And started from the very beginning and took him through it to help try to set kind of a baseline expectation. He says, wow, I didn't realize. Well, he's not the only one out there that didn't realize that here's how the process can go. And I'm not going to say this because you gave me a bad time last week.
What did I say?
when I said it gave you a more dignified.
You mean you're dignified? Let's not go there. Golly, I'm getting ready to order my tombstone.
Yeah, I saw the white just come right over your face, and he didn't say dignified again, did he? No, I did.
In this market, let's let all that the stereotypical stuff does not apply. It need not apply in this situation, because whether you're doing a strategic foreclosure to survive or a strategic short sale to survive and support your family, you have to do what makes sense.
Well,
and a team of people helping you through that process, whatever it is what it is.
For so many people, I have a client that we submitted an offer on a short sale about a month ago, and we're waiting for the lender to go through their loss mitigation department to go through the process of evaluating the short sale and doing their evaluation of the value of the property and so forth. And I was talking to the listing agent just this week, and she says to me, my client, and this is, mind you, this is a rental property that this particular client is selling. And she says, my client is absolutely freaking out. And I said, well, tell me why. Well, this is the first time that he's ever missed a mortgage payment.
Right.
I said, ever? She says, a payment of any kind.
Right.
Ever.
Right. And again, this is generational. Unfortunately, those folks who are facing that dilemma right now have been trained to never have that situation happen. We were raised by people who went through the Depression and Vietnam and those things, and we were supposed to come out of those stronger. And so to face that, I think a lot of people are struggling.
Yeah. I would have to agree. I would have to agree.
Yeah.
So again, continue to make your payments if at all possible. If you cannot, there are alternatives that are available to you. If you'd like us to help determine if your particular loan is owned by Fannie Mae or Freddie Mac, and to see if refinancing under HARP 2.0 makes sense to you, please give us a call. We'd love to be able to help, at the very least, answer the questions for you to help give you kind of a baseline expectation. You can call us anytime on our off-air number at 800-979-3958, or you can use press 4 keyword
KMJ HARP 2.0.
And we will send more information about HARP 2.0 right to your phone. Well, if you are underwater and you can't make that payment, short sale might be a potential alternative for you. Well, it's interesting to note that Bank of America is one of the 5 lenders that were part of the $26 billion 49 states attorneys general's settlement that we saw within the last 60 days that we're starting to see. And I also saw something this morning on the news that they were talking about. There is someone that Kamala Harris, who is the state of California Attorney General, that someone that's supposed to oversee the distribution of cash as far as the actual programs concerned.
Oh, okay.
Those eligible.
So we're starting to hear
grumbles about it.
Happening.
But there is a stay on any type of distribution whatsoever as far as monies are concerned.
Really?
And so it is playing out before us. And granted, this is history.
Right. Uncharted territory here.
That we've never seen before and that we are seeing unfold right out from under our noses. Well, Bank of America is one of those 5, Bank of America, Wells, Citi, Chase, as well as Ally Bank, formerly GMAC. Well, Bank of America is actually making changes to the short sale procedures and introducing, ironically, I wonder how much of this is on the coattails of, as part of this settlement, you will make changes to your short sale processes or else. Actually, there is no or else.
Period.
Yeah,
we will make changes.
And they're introducing a new improved task flow within the short sale technology module from Equator. Equator is an online web portal that all communication, all documentation is uploaded and maintained so that you've got a complete and accurate history of communication, of documentation, of all that good stuff. So it is...
So they're changing their internal system.
Correct, to reduce the actual short sale period or the time to approval from submission to approval to 3 weeks.
So those clocks are ticking automatically by their systems.
Yeah, and the bigger
3 weeks,
the bigger bulls are getting more getting noticed more out in the pasture. The smaller guys that are running around aren't getting as much notice. Green Tree, as an example, their required turn time on short sales is 60 days right at the moment, guaranteed 60 days.
Okay.
From submission of the short sale package from customer service to loss mitigation.
Wow.
So it's interesting, again, that the landscape is so varied. Not all lender or servicer is created equal when it comes time for, so what are you going to do? And how fast are you going to do it? But what we are seeing is more folks, specifically the bigger ones, Bank of America, Wells, Citi, Chase.
Coming on board with some changes.
I tell you what, they're getting a whole lot more pliable. And part of it is as we said before in previous shows, there's an $850 million fine that Bank of America says, whoa, how about we do this? Instead of paying that fine, we will do this. We'll do principal reduction. We will shorten the timelines as far as our short sale approvals so we can give folks more dignified transition.
Dignified. Stop with your dignified.
I'm getting a dirty look here.
I know. Oh, my goodness.
Well, short sale may be an option for you. Don't hesitate to give us a call. If you have any real estate or real estate financing questions, or any questions related to the information that we share with you on our show today, we would love to hear from you. Call us anytime on our off-air number at 800-979-3958, or check out our resources online at reofresnohomes.com. Have you ever been to the website before? There's a lot of information. All of our listings, real-time, accurate real-time statuses as far as whether it's active, pending, backup, whatever it is. There's a number of different things. If you go to the right-hand side of the website and go about 3/4 of the way down, you can actually, it says, Craig, help me with, and there's a number of topics there. Seriously, check it out sometime. We'd love to be a great resource for you. Or you can just use press 4 keyword KMJ, call Valleywide.
I'm just thinking of the Craig, help me with. Is there like an empty space I can fill it in anytime?
Help me, Spock. Well, after the break, we're going to take a closer look. Michelle's going to help me take a lot closer look at the process of purchasing any property with 203K financing, and try to get you armed with some do's as well as some don'ts to help set the right expectations as you hunt for the perfect diamond in the rough. We'll see you on the other side of the break. You are listening to the Real Estate Radio Network here on 105.9, the FM KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Thinking about buying a home? Find out how the HUD Home Store can help you. Visit HUDHomestore.com. Look at HUD homes available for sale near you or nationwide. Why HUD Home Store? HUD will pay up to 3% of the buyer's closing cost. The price of the home is based on an FHA as-is appraisal, which is already completed, saving you an average of $400. And there is an owner-occupant priority bidding period during the first 30 days. Want to know more? Visit HUDHomestore.com.
Mortgage interest rates are at historic lows, and there's never been a more affordable time to buy real estate. Whether you're looking for your first home, moving up, or your next income-producing property, let the mortgage professionals at Valleywide help. Valleywide Homes has been helping homeowners with their mortgage needs since 1997. When it comes to the Valley's real estate, we know our way around the neighborhood. Call toll-free, 800-979-3958, and put the seasoned professionals at Valleywide Homes to work for you. Valleywide Homes, NMLS number 342062, 235952, California Department of Real Estate License 01228460.
You're listening to Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
Well, we promised you we were going to take a look at something that's a little foreign, often misunderstood. Well, it's, big time misunderstood. So, 203K loans.
Yep.
Yep.
I'm loving them.
Yep,
I'm
loving
having
them.
fun with them.
Yeah, just rip the Band-Aid off.
You know what? I have to say, as a person in the market, nothing is more fun, empowering than learning something new. First of all,
you said you like big words. I was trying to use a big word. I went from fun to empower. I'm not
analyzation paralyzation. Did you say analysis paralysis? Well, no, but I mean, this one has a lot of moving parts. Let's be honest, that you have to negotiate and keep moving forward at the same time. It is so effective.
Let me just say this: if you enjoy rooting for the underdog,
I do.
This particular product is a product for you.
Yes.
So we hope you're going to please stay with us, because we'd love to get you in the loop as far as, Michelle, what's a 203K loan?
A 203K loan is a rehab or renovation loan. They come in a couple different varieties, streamlined or non-streamlined. Streamlined would be those loans that are under $35,000, $1 to $35,000.
Gotcha.
And they're there to correctly repair a deficient property up to FHA guidelines.
Sweet.
And now non-streamlined would be anything that includes anything potentially over $35,000 or includes designing, architecture, moving walls. Actually, you may still have permits in the smaller ones, but this is going to be more sign-offs, more checks and balances in place, because it's a larger project.
Gotcha. Okay.
Potentially. So So what's really interesting is in this market in Fresno, what we're seeing is there's just so few properties available at the moment, and I know people may not think that if they've had a property on the market or they see a lot of signs in the yards, but a lot of those are pending, a lot of those are backup. They're not all available, which we talked about earlier. And so what we're seeing is a lot of deficient properties where
meaning it's pretty rough.
Yeah, it's a rough. Maybe it's vandalized.
Right.
Maybe appliances have been taken out, or windows were broken because the property sat while it was going through foreclosure, or things of that nature. I mean, lots of different situations we're seeing out there.
Right.
I mean, I know that you've gone into properties and there's no wiring in the entire house. Like, it's a great house, but someone stripped the whole wiring. Or we talked recently about the air conditioning unit disappearing.
Common vandalism problem.
Yes.
Because of because it's so easy to strip copper wiring out of.
Evidently.
Yeah, evidently.
They sit and peel it after that, I heard.
Somebody's paying for it. They sit and peel it. Wow.
The
little potato peeler?
Yeah, the potato peeler or something. I don't know. But nonetheless, these properties will not go your traditional FHA financing.
And let's clarify that. For FHA financing, there are what's called minimum property requirements. So a certain...
Okay, safety.
Yeah.
Broken windows do not comply with their requirements.
Sure.
They want you to be able to move into that property and live going forward.
Sure.
It's an insured property.
All the outlets have to work.
Exactly.
The heating, there must be a heating source. There must be a cooling source.
And we're not talking about, I mean, this isn't complicated stuff.
Right.
It doesn't have to meet some weird expectation. It has to be livable. You have to be able to move in immediately and start living.
Sure.
And if you can't, you suspect it's deficient. Or if the fence is falling down, or the paint's peeling. It's a minor or major maintenance that's not occurred in some cases.
So I'm going to take, and I say this because I have an idea of what the answer is, but because you've got properties that are out there that are deficient, most of the times what you're going to see in today's market, with real estate being as affordable as it is, affordability index being as low as it is in Fresno, Madera, Tulare counties, it's at a 10-year low. You're seeing that real estate is becoming a very popular investment vehicle for investors. Correct. Folks that have cash, folks that are wanting to come in and buy low and do one of two things: buy and long-term hold, or buy and short-term hold. Short-term is for those that are buy, rehab, and flip. And with some sort of, hopefully for them, some sort of profit margin built in there. But there's a lot of investors with cash that expect to be able to come in on these properties that are deficient, because so many agents think that what?
They can't finance them. Nobody can finance these. It's cash only. I'm sorry. Nobody can finance it. Really? I have heard that at least 6 times in the last week, and I'm starting to get really tired.
I was just going to say, how many times? How does that get your dander?
Oh, you know what? Because, again, certain price ranges, and I'm really being honest when I say anything, in my opinion, 150 or below. Anything in that, you got your first-time home buyers generally in that arena. And this is where I get furious, because we have these first-time home buyers who have not been disenfranchised by what they hear in the news and all those other things. And they honestly are out there looking for their first home and excited. And we write up offers, and then they come back with, oh, no, I'm sorry, it has to be cash. What do you mean it has to be cash?
So on top of it being an extremely competitive market, roughly 1,500 units available right now that are active in Fresno County, single-family properties. On top of it being extremely competitive, that's roughly too much. Some people might say, well, 1,500, that seems like a lot. No. It's not. It is we're at one of the lowest points in inventory that we've seen in quite some time. It also breeds an amazing competition, because as opposed to there being 1 or 2 offers, there's 5, 6, 7, 8. We had a property recently that was, I think it was a Bank of America REO, and we had, my gosh, like 10, 11 offers on the doggone thing. It was amazing. Now, and
it's a great thing. Don't get me wrong. Yeah. I mean, it's a great thing that we have that kind of activity, that we have houses moving. I mean, we're excited.
It's what we've all been waiting for.
That's right. Yeah. That's what's going to build our industry back up and give the value back to those homeowners who are underwater. So we know that's a good thing. So I don't want to discredit that.
As well as if it's an investor that's coming in, hopefully they're going to be bringing some jobs here. If they're planning on buying it, whether it's a short-term or long-term hold, there's going to be some work that's going to need to be done as far as the property is concerned. So we don't want to discount that.
No, and I don't want to bash investors in any way, but I do see where, because the market is uneducated, others lose out.
So many folks or so many agents think. And here's the other sad thing. If I say it this way, so many agents, or I shouldn't say so many agents, but what if the agent really wants to take the easy way out? And sorry, cash only.
Well, and look, In addition to that,
much work.
yeah, it is a little more work for the agent because they have to wait a little bit longer, unfortunately. But let's think of that, though. If you're a seller and you have a property, let's say mom lived in the property, mom's no longer with us, and now I have this family piece of property I need to move.
Right.
Do you want the agent who's going to get you the best dollar for that property, or do you want the agent who's going to take the easy way out and take investor money just to be done?
Well, let me say this.
And that's where I have an ethics issue with what we're talking about.
So let's expound on that.
Okay.
Investors are typically wanting to come in and wanting to get a significant discount.
Correct.
Because it is cash.
Correct.
Hey, we're going to offer, I hear this all the time, we're going to offer $85,000 all cash, no contingencies, and 7-day close. I don't know of an REO entity out there that is capable of closing in 7 days.
Yeah, no,
because there's too much going on in the back office that needs to be done, not necessarily in our office, but in their office with escrow.
Right.
Many of these REO companies have large title and escrow operations they've contracted with either state or nationally, and it just doesn't get done that fast.
Right.
It is it's a big machine with a lot of working parts. So someone comes in. So in other words, it doesn't really mean a whole lot to come in and say, hey, I'm going to offer you less. Now, let me also bring this up real quick, and I think this is important to note. When you're talking any REO, company, person, entity, broker, whatever it is in town, I'm just going to tell you this. They're being judged. If they don't realize it, they need to. And most of them do, I think. They are being judged or scored on how high of a net are they going to be able to get for their property, or how much does it deviate from here's the list price and what you ultimately sell it for. So, meaning if it's listed for 100 because the asset manager values it at 100, but you're for whatever reason saying we got to let this go for 85 cash. The asset manager really relies on us to be above and beyond photos and marketing photos and inspection photos and appraisal reports and appraisal photos. They really rely on us as professionals to be their eyes and feet on the street. If we're letting properties go for too much below what they deem to be market value for that particular property, it goes against what we call our scorecard. So like as an example with Bank of America, it affects our scorecard, quote unquote.
So does that affect the number of properties that you in turn will be receiving from that institution?
It certainly does. It affects our performance. It affects our performance overall, 10,000 foot. And that's not the only thing that we and the other REO agents in town are scored on. HUD, the company that we work for as well, they score us in much the same way. Number of properties or the number of days a property's on the market, what our net is from the original appraised value, because every single one of the properties that are HUD homes are appraised prior to going on the market.
And that is an interesting thing to touch on, because those investors who are listening, be aware.
Yep.
I don't know a property out there that isn't having a BPO or an appraisal done on it before it goes on the market.
Or both.
Or both. So we're talking about properties that are being listed at market value and can get that value if the right offer comes in. And those right offers, in some cases, are going to be these 203Ks.
So if the property's rough and a buyer wants to come in and really it gives the buyer the opportunity, as long as it's owner-occupied and the buyer is looking to reside in that property as their primary residence, they can potentially... I guess you could say this, as long as obviously it's market, garnering a higher net to the seller of that or underlying owner of that particular property than someone that is typically cash. Unless the cash just has cash to burn. Right.
So for instance, instead of the current property we have out there is in the 90s, a 203K going right now. Probably they would not have sold that property for above 80 with all the deficiencies that it has. Now, market value might be in the 90s with the deficiencies, but for somebody to come in and repair that property and have the cash to do it, it's limited in some cases for the volume of people who are available for that. So their best bet as an asset manager is to look at those 203K offers, because generally what's happening is if you get a 203K offer, they are doing their own maintenance, they're doing their own repairs, and that sits better with the seller. They don't have to come in and change things, fix things. So it's in the seller's best interest to be looking at those.
Less money out of their pocket.
They're going to net more.
Any expense that they put forth hits their bottom line.
Right.
If they feel like they've got to come in because the walls are orange and green and the carpet is dirty, stained, and it smells like
But one broken window, just so you know, one broken window, one small defect can cause a loan to go 203K in this situation, but they're doable, and they're not brain surgery.
Correct.
And if there's one deficiency, allow the person to go 203K and get it done. Get it done. It nets you more if you will look at those. Yeah.
I'm going to buy you a cape with 203K on the back.
Yeah, I like that. I like that. Yeah.
Do you have any preference in cape color?
Nope.
No.
Nope.
Pretty easy to...
Yeah, but actually make it match the red boots, my red cowboy boots. So how do we see them currently underutilized? I think really what we're seeing is we're seeing first-time home buyers not being able to utilize them, selling agents not being able to actually wrap their mind around it, so they just kind of give up on it before they even evaluate a 203K option.
Isn't that funny? In life in general, no matter what it is, folks tend to want to take the shortcuts, and it's a lot easier to sell something cash, even if it means a lower net to the seller. Well, I wonder if it was their property, if they'd be talking that way.
Right.
I mean, really, genuinely,
No,
I think that's a valid question.
And at the end of the day, the seller gets a check from whomever paid for the property. It doesn't matter if it was a bank or a guy who bought cash. He still gets a check.
Right. Well, so the question is, are they going to wait an extra 30 days, let's say, for a $10,000 higher net?
I would think that'd be advantageous for most.
In most instances. However, I will say this. There was an asset manager we were dealing with Bank of America a while back on a property that was really rough. And someone did come in with, list price was 108 or 109.8. As improved for that particular neighborhood and that particular square footage, probably 145. Boy, he did not want to hear anything about anything but cash. Then again, though, Jeff tried to have the conversation with him, but it wasn't really productive.
But again, I'm going to ask: is that person educated, or had they seen one bad experience and so they gave up on the process? And it's one of those things where everybody on the team needs to be educated, and that's what our goal is. To educate the public, to educate agents, to get people in the know on how we can move this forward.
Sure.
And just one side note before we break, because I know we need to break again probably. Owner occupant only, but you can do duplexes, triplexes, up to 4 units. You can do some of those projects. So if you're going to live in the property, you can still have all the FHA perks, 3.5% down, etc., and still buy some of those other properties. So, for long-term people who want to hold a property, this is a great avenue. I've
seen many, actually, more than a few customers that have bought a triplex or a fourplex as their first property.
Sure.
Resided in the property for a year, and then moved to another property.
Exactly.
Bought a single-family residence.
It's a great way to build wealth for people.
Oh, my gosh. Well, if you have any real estate or real estate financing-related questions or questions regarding the information that we've covered here today on our show, gosh, we'd love to hear from you. Call us anytime on our off-air number at 800-979-3958, or you can check out our resources online at REO Fresno Homes, or just press forward keyword KMJ.
Call Valleywide
to get connected to us anytime. Well, after the break, we're going to give you some very helpful tips, again, on how to win in the real estate market using 203K financing. Stay right there. You are not going to want to miss this. You are listening to the Real Estate Radio Network here on 105.9, the FM KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Thinking about buying a home? Find out how the HUD Home Store can help you. Visit HUDHomestore.com. Look at HUD homes available for sale near you or nationwide. Why HUD Home Store? HUD will pay up to 3% of the buyer's closing cost. The price of the home is based on an FHA as-is appraisal, which is already completed, saving you an average of $400. And there is an owner-occupant priority bidding period during the first 30 days. Want to know more? Visit HUDHomestore.com.
All it takes is one call to the professionals at Valleywide Homes, and you'll start building wealth in real estate. Whether you're looking for your first home, moving up, or your next income-producing investment property, let the experts at Valleywide Homes help. There's never been a better time to get into the real estate market. Visit our website at reofresnohomes.com or call toll-free 800-979-3958. That's 800-979-3958. And put the seasoned professionals of Valley-Wide Homes to work for you.
You're listening to Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
Well, as we were talking before the break, we're having a conversation with Michelle about 203K financing, the often misunderstood and very much so underutilized.
It's that stepchild nobody wants to
Yeah, with some of the responses you and I have received from other agents, it is the redheaded stepchild that nobody wants to
adopt.
To really even acknowledge, sit in the corner. And I'll get with you when I get with you. Well, talking about 203K financing, Michelle, let's talk. We talked before the break as far as how it's underutilized for buyers. Could be a first-time home buyer that is wanting to purchase a property to live in, but this particular property has some rough edges. It needs some TLC. It needs certain items to get it up to FHA's minimum property standards.
Right.
The misnomer is that it may only be, cash only. Sorry, there's too much work that this particular property needs. That's actually not the case. Talk to our listeners about the process as far as once you find a property, or maybe even before that. What's the process?
I would say the biggest thing that I see in this market is that people need to, one, wrap their mind around the fact that might be a great option for them to look at some of these properties that are sitting on the market a little bit longer and saying, hey, why is this one sitting on the market a little longer? What's going on with it?
Every property is like a crime scene.
It is.
It's like CSI,
exactly.
Fresno Homes.
Why is it on the market?
Sure.
Open up, your portal. The portals that we're setting up, you might want to lower that baseline purchase price because that gives you some flexibility. If you pre-approved at $150,000 or $120,000 or $300,000, if you bring your dollar amount lower on that portal, you're going to get some of those deficient properties in the 200 range or the 100 range or whatever the case may be.
Right.
So you open up your options. First of all, you might find the best house in a really great neighborhood if it was just repaired.
Right.
And have automatic equity in that house.
Sure.
So nonetheless, first and foremost, you want to make sure that you're pre-approved. You want to start hunting for your property. Once you think you found the right property, and this is where the comment cash only I always question or I bring to their attention. Now, is it feasible? Now we got to look at it. You've got to have a good agent, loan officer, and a renovation person on your team to help you decide if it makes dollars and cents.
Right.
It's got to make dollars and cents. Nobody wants to put you on a property and have you upside down from day one. So it doesn't make sense.
So let's simplify. When you say make dollars and cents, first of all, as far as what's the asking price as far as the property?
Right.
So how much, bottom line, is the seller asking for that particular property?
Right.
And based upon its current condition, is it priced based upon its current condition with the deficiencies currently? So use the example of the transaction that you're in right at the moment.
Okay.
You were talking about it earlier as far as...
We have a transaction that's asking price was $93 and some change. My client came in with a 203K. He offered asking. No concessions, or maybe he has some concessions, but nonetheless, he offered asking on a 203K because what we were able to determine is the property has less than $10,000 in deficiencies that need to be corrected, and they're all very aesthetic. I think we need a new heating unit is the most in-depth, probably, the most complicated piece of the puzzle. Nonetheless, we're talking about aesthetic repairs, a new fence, some basic stuff. If we comp that property out, we're looking at $120,000 in that market, in that area,
so
for a similar property improved.
Improved. Gotcha.
So his 90 and some change, 93 and some change, plus the 10 in improvements, you're looking at $103,000 and some change he's getting in for. And his property will be worth a good $115,000, $120,000 when it's done.
In today's market, your client has got to be ecstatic.
Oh my gosh, he's stoked. Not to mention, he gets to go in and put the carpet the color he wants, the paint the color he wants. He gets to dial it in exactly as he wants.
He gets to go to the, what do they call that?
That's a terrible thing. From the basement to the penthouse?
No. Oh, my gosh. No, what's with the new builders? They get to go to the new home center where you get to pick out all your colors.
Oh, yes. He gets to do selections. But it's been a great process. He's enjoyed it.
And when he's done, he's got equity.
He's got exactly what he wants, exactly the way he wants it. and he was a first-time home buyer. Actually, I shouldn't say it. He's buying a home for he and his daughter. First-time home might have been 15 years ago,
Gotcha.
but he has not lived in his own home for a while. So this
Gotcha.
is a fun thing for him.
Wow.
So anyways, there's a team of people, though, and that feasibility that goes on in the beginning of the process, it takes place with your agent, your loan officer, and a renovation person. Someone who is trained to know how to guide you.
So talk about that. You go out and see a property. You find the property. It does have some rough edges. You've got the asking price. And you're trying to determine, is it feasible? So if you're able to buy it right, buy it far enough below market after the repairs.
Does it all make dollars and cents?
Then it helps to make dollars and cents. Gotcha.
And then it's a regular process. It is your regular inspections take place. Your estimates take place. Your appraisal takes place. There's a process there, and it's just lining all those items up for it to move forward. And it's a really, really easy process if you have the right team on board. And I think that's the kicker. If you don't have an agent saying, "Oh, cash only."
Right.
You got to have people who know what they're doing, and so I think that's important. And they're not going to get you in over your head. I mean, you got to have some guidance there when it comes to making sure it all makes sense with bids and whatnot. But if go ahead.
I was going to say, you feel pretty comfortable with the team that you've got in place.
Oh, my gosh. I love the team. We have a great renovation specialist, great inspectors who guide us to contractors if we need a specific type of contractor. And the contractor is the client's choice. They get to work with whomever they want.
Sure.
We also have a team of people who help them after the loan closes through the construction portion to assist them to make sure there's no mistakes made and everything comes out well.
Wow. Fantastic. So let's just say, suffice it to say, if you do find that diamond in the rough, Michelle can help, right?
Absolutely.
Fantastic.
I'd love to help.
Well, you know what? If you have any real estate or real estate financing related questions or questions related to the information that Michelle and I just shared with you here on the show, we'd love to hear from you. Again, call us anytime on our off-air number at 800-979-3958 or check out our resources online at reofresnohomes.com or just use press 4 keyword
KMJ, call Valleywide
to get connected to us anytime. Well, a big thank you again, Michelle. As always, my resident 203K specialist today. Thanks again for coming by, kid. And thanks for the coffee.
You needed it, friend.
I sure did. Yeah, Mr. Tongue-Tied. As always, a big thank you to Johnny B. behind the mics. Johnny, you always make us sound so good, buddy. Oh, stop.
Stop blushing, Johnny.
Behave. Our goal is to get you the timely and accurate truth about your local real estate market so we can help bring you back home. Don't forget to tune in to the Real Estate Radio Network next Sunday at 7 a.m. on 105.9, the FM KMJ. Local news, local talk. Make it a great day, Central Valley, and we will see you next week.
The preceding program was paid for by the Real Estate Radio Network.